Good morning, my dear students. Our today's topic is sources of credit. The various types of loans can be conveniently grouped as formal sector loans and informal sector loans. Among the former are loans from banks and cooperatives. The informal lenders include money lenders, traders, employers, relatives, and friends, etc. The Reserve Bank of India supervises the functioning of formal sources of loans. For instance, the banks maintain a minimum cash balance out of the deposits they receive. The RBI monitors the banks in actually maintaining cash balance. Similarly, the RBI says that the banks give loans not just profit making businesses and traders but also to small cultivators, small scale industries, small borrowers, etc. Periodically, banks have to submit information to the RBI on how much they are lending, to whom, at what interest rate, etc. What is the difference between these formal and informal sources of credit? Banks and cooperatives are the examples of formal sources, and money lenders, traders, employers, friends and relatives, etc., are the examples of informal sources. Formal sources of credit are registered by the government and have to follow its rules and regulations, whereas informal sources include those small and scattered units which are largely outside the control of the government. RBI supervises the functions of formal sources of credit, but in informal sources, there is no organization that supervises the credit activities. Formal sources usually charges lower rates of interest, whereas in informal sources, they charge much higher rates of interest. Formal sector using legal measures to get their money back, but informal sector using unfair means to get back money. Compared to formal sector, most of the informal lenders charge a much higher interest on loans. Thus, the cost of borrowing is much higher in the informal sector. It means a large part of the earnings of the borrowers is used to repay the loan. Hence, borrowers have less income left for themselves. This could lead to increasing debt. Also, people who might wish to start an enterprise by borrowing may not do so because of high cost of borrowing. For these reasons, banks and cooperatives need to lend more. This would lead to higher incomes and money, and many people could then borrow cheaply for a variety of needs. They could grow crops, do business, set up small scale industries, etc. So, cheap and affordable credit is crucial for the country's development. The 85% of the loans taken by the poor households in the urban areas are from informal sources. A similar pattern is also found in rural areas. The rich households are availing cheap credit from formal lenders, whereas the poor households have to pay a large amount for borrowing. The formal sector still meets only about half of the credit needs of the rural people. The remaining credit needs are met from informal sources. Thus, it is necessary that banks and cooperatives increase their lending, particularly in the rural areas, so that the dependence on informal sources of credit reduces. While formal sector loans need to expand, it is also necessary that everyone receives these loans. This, this is important that the formal credit is distributed more equally so that the poor can benefit from the cheaper loans. Self-help groups. We have seen that poor households are still dependent on informal sources of credit. Why is it so? Banks are not present everywhere in rural India. Even when they are present, getting a loan from a bank is much more difficult than taking a loan from informal sources. Absence of collateral is one of the major reasons which prevents the poor from getting bank loans. Informal lenders, such as money lenders, on the other hand, know the borrowers personally and hence are often willing to give a loan without collateral. The borrowers can, if necessary, approach the money lenders even without repaying their earlier loans. However, the moneylenders charge very high rate of interest, keep no records of the transactions and harass the poor borrowers. In recent years, people have tried some newer ways of providing loans to the poor. The idea is to organize rural poor, in particular women, into small self-help groups and pool their savings. A typical self-help group has 15 to 20 members, usually belonging to one neighborhood, who meet and save regularly. Saving per member varies from rupees 25 to rupees 100 or more, depending on the ability of the people to save. Members can take small loans from the group itself to meet their needs. The group charges interest on these loans, but this is still less than what the money lenders charges. After a year or two, if the group is regular in savings, it becomes eligible for availing loan from the bank. Loan is sanctioned in the name of the group and is meant to create self-employment opportunities for the members. For instance, small loans are provided to the members for leasing mortgage land, for meeting working capital needs, for housing materials, for acquiring assets like sewing machine, hand looms, cattle, etc. Most of the important decisions regarding the savings and loan activities are taken by the group members. The group decides as regards the loan to be granted, the purpose, amount, interest to be charged, repayment schedule, etc. It is the group which is responsible for the repayment of the loan. Any case of non-repayment of loan by any one member is followed up seriously by other members in the group. Because of this feature, banks are willing to lend to the poor woman when organized in SHGs, even though they have no collateral as such. Thus, the SHGs help borrowers overcome the problem of lack of collateral. They can get timely loans for a variety of purposes and at a reasonable interest rate. Moreover, SHGs are the building blocks of organization of rural poor. Not only does it help women to become financially self-reliant, the regular meetings of the group provide a platform to discuss and act on a variety of social issues such as health, nutrition, domestic violence, etc. Thank you.